Oil falls. Spooked by means of Beijing COVID caution and inflation concerns. Singapore oil charges slid on Monday as a flare-up in COVID-19 cases in Beijing quelled hopes for a rapid pickup in China's gas demand, even as concerns approximately worldwide inflation and slow monetary boom in addition depressed the market. Brent crude futures fell $1.81, or 1.48%, to $120.20 a barrel via 0443 GMT, whilst U.S. West Texas Intermediate crude turned into at $118.81 a barrel, down $1.86, or 1.54%. Both contracts dropped over $2 earlier within the session. Prices fell after Chinese officers warned on Sunday of a ferocious COVID-19 unfold within the capital and announced plans to behavior mass checking out in Beijing until Wednesday. China remains the big near-term downside risk, however maximum view the slow normalization of Chinese call for as a effective fantastic for oil in spite of the capacity for lockdown noise inside the coming weeks as contemporary call for is some distance from reflecting normal situations, Stephen Innes of SPI Asset Management stated in a Observe. Both global oil benchmarks rose more than 1% remaining week after records confirmed strong oil call for in the global's top client, the USA, despite inflation worries, and on hopes that intake in second biggest international purchaser China could rebound after lockdown measures had been lifted from June 1. Concerns approximately further interest fee hikes following red-hot U.S. inflation statistics launched on Friday also are weighing on international monetary markets. The U.S. Purchaser Price Index increased a bigger-than-expected 8.6% ultimate month, the largest year-on-year boom given that December 1981, respectable figures confirmed, rushing hopes that inflation had peaked. Worries over slowing economic boom dampening international consumption inside the coming months and persistent COVID curbs in China denting its consumption in the brief term are dominating marketplace sentiment, Vandana Hari, founder of oil market analysis issuer Vanda Nasdaq, VNDA Insights, stated in a word. Oil manufacturers and refiners are jogging at full throttle to fulfill top summer demand, even as investors are carefully looking for any feasible impact from labor disputes in Libya, Norway and South Korea on oil exports and consumption. To boost resources inside the West, Saudi Arabia, the sector's top exporter, deliberate to divert a few crude to Europe from China in July, investors said.